So I think there's a small problem with the slides, so I'm about to get a laptop up here, I guess, that I'm going to use instead of the clicker. So don't go anywhere if you're interested in the future of investment, because we're going to talk about how everything's going to change thanks to tokenization. So in the meantime, I guess we're going to get into it. So, well, we'll wait on those slides to come up. My name is Ethan Pierce. I have a couple different activities that kind of give me a reason to do talking about. Oh, there we are. It showed up. Perfect. So, the first thing before I jump in, since I'm going to talk a lot about investments and finance, I am not a lawyer, and this is not legal or financial advice, so that's out of the way. BorderlessVentures is my cross-border investment and advisory activity between Europe and Southeast Asia and the US. And more importantly to this subject, you can go to the next slide. CryptoAssets Institute is a think tank between Paris, Singapore, and San Francisco working to help governments with adoption and regulation around the blockchain economy and crypto assets, corporates with historical business model disruption and opportunities, as well as investment funds dealing with tokenization and all the different ways that works. CryptoAssets Local, if you know Startup Grind, it's a global ecosystem for the blockchain and crypto assets community. Run by the Institute, and I have a book coming out in Q3 called Security Token Offerings, Tokenized Securities and the Future of Investment. Next. You can go ahead and go to, actually no. So if you want a digital copy of that when it comes out, you can go to my website, ethanpierce.com/STO, and you can sign up for a free digital copy when it comes out, so feel free to do that. It makes you tweet, that way I get some visibility out of that. So we talk a lot of cool things with crypto assets. We hear cryptocurrencies all the time. That's the word people love to use, and some of those are actual digital currencies. The realities are, if they're not a currency and they're not a token for usage in some kind of activity, then they're probably some kind of commodity or asset, especially as we move forward. That's what we're going to be seeing. Next. Make sure this doesn't work. I guess it doesn't, nope. So go back. So what is wrong with future utility? What is wrong with utility? So the idea of ICOs has kind of died. Lots of people want them to still be alive. Lots of people are trying to run them. The problem is that most people aren't actually investing in them, which makes them more or less dead regardless of what people are doing. And the reason is this idea of utility. So utility means that the token actually does something inside the startup's ecosystem or economy or in some way. And that's perfectly fine for almost all the regulators in the world. If you launch a token today and it's useful in your company today as far as utility. But the problem is almost every single ICO in the future of what we see with these things, you're talking about building a token for today for an activity that will be launched in the future. So here's my token, and in a year from now, using the money you give me now, I will have been able to build something I'm going to launch, and your token will be useful. And almost every single regulator on the planet at this point is deciding that future utility means it's a security. And a security is just a fancy word for investment. Next. That means it's a regulated investment, and that means you come under all kinds of oversight and control from all of these different regulators. And it's very simple. In the US, at least, we have something called the Howey test, and it doesn't really matter all the details. But basically, if you give somebody money with the expectation that that money is going to make you some kind of profit, that's a very good chance that if in your head you think it's an investment, then they're going to consider it not just you exchanging money with somebody for some kind of blah, blah, blah. That is a security, which means it needs to be regulated by the SEC. And regulation by the SEC then means you have to conform with all kinds of different issues. So ICOs, as a way to raise money, if we're talking about give me money today to build something for tomorrow, are pretty much not going to be happening. Not in the US, not in most Western regulated countries. Next. So when we talk a lot about security tokens. I'm going to flip that around. And if anybody wants these slides, I'll be available in the back afterwards outside, and I can send you a copy of them. Security tokens are, if we turn it around and call it a tokenized security, it helps make this a little bit more clear for people. Because if we say security token, we're stuck in the world of tokens and blockchain and whatever, and we hear the word security, and we don't really know what that might mean. If we flip it around and we say tokenized securities, we're putting the stress on the word security, and that means we realize we're doing something that involves the regulated financial system, and we're tokenizing it, meaning that we're bringing it into this blockchain crypto world that we all love. Next. So again, yeah, security is just a fancy word for a tradable financial asset. Oh, hello. Why would we want to tokenize securities? Next. So one of the first things that we see that we have a problem with most assets, the idea is that pretty much everything around us, whether it's real estate, whether it's a small, medium-sized business, whether it's a startup, intellectual property, film, music, art, all kinds of things, these assets are very hard to invest into for most regular people. Meaning that if you already happen to be able to own a nice apartment in your city, that's great, but can you buy an entire second apartment as an investment? So if you live in San Francisco and you already have $1 million, $2 million home for yourself, can you buy another one? Maybe not. And the issue with that is a lot of the highest performing investments are actually out of the reach of most normal middle-class type investors and what they would want to do. Fractional ownership changes that. What it allows us to do is to say, imagine a building that has 10 apartments in it. Well, the unit ownership of that building is one apartment. If we tokenize that building, then all of a sudden, the unit of ownership is however many tokens we have. So if we divide that building up into 1 million tokens, well, now I could buy just 10 tokens of the building, or I could buy 10% of an apartment's equivalent of tokens. But I can buy whatever level of fractional ownership that fits my investment capabilities, my funds, and my interest. Next. Liquidity. So this becomes a very big deal. Liquidity means your ability to move in and out of an investment. And so when I buy into something like a startup as an investment, it's very illiquid because I need that startup to exit in some way and make some money for me to be able to make any money from it. So for example, just last week, we had the wonderful IPO of Uber. And, well, actually, I mean, to go from nothing to $50-something billion in valuation regardless of the ups and downs, that's still pretty cool as a success, regardless of Uber's issues, but it wasn't as big as they would thought it would be. The issue is that there were people who put $5 million, $10 million into Uber years ago who were sitting on hundreds of millions or billions of dollars of returns and could not get to them, because they were locked up in the investment, and the only way to get liquidity was for Uber to eventually either get acquired, or in this case, it was obvious it would be an IPO at some point. So the fact that we can't move in and out of an investment means our money is tied up, and that's what we're going to see right now with Pinterest and Airbnb and Uber and Lyft and all these different companies going IPO. We're going to see billions of capital that came from millions in capital that will be re-injected into the innovation ecosystem, and that's going to be extremely valuable. But as investors, that's really problematic to not be able to get access to those gains. So imagine if I had put some money into Uber, and I put $5 million into Uber, and now my investment's worth $100 million. If it was some kind of a liquid investment like tokenized, I could be able to get my $100 million out, but you still realize it's going to go from $100 million. That $100 million might be worth $500 million, or might be worth $1 billion, so you want to get in. So the ability for people to still move in and out would matter, and that doesn't happen actually in startup investments. It happens with the stock market and other things. So tokenized securities will bring us liquidity. Next. If we're talking about the stock market, one of the biggest issues we have at the stock market, if I use my Ameritrade account in the US and I buy something or sell it, I can have 2 to 3 days of settlement, which means time that I have to wait for that transaction to actually be validated. If we move that system into the ledger universe, then all of a sudden we won't have that issue. Next. Shareholder cap. Unless you are a public company in the U.S., you can't have more than 2,000 shareholders, which means if you're going to take investment on, it was 500 shareholders, and now it's moved to 2,000. But 2,000 is still a fairly small number if you're a large company that wants to raise capital from the world. And tokenization does not have any kind of a cap in that way. Next. Global capital, so this lets us access money everywhere. It's not very easy if you're an American to necessarily invest in a stock market outside the U.S., or if you're French to invest in a stock market somewhere else, or buy an apartment building in L.A., or buy a single apartment somewhere, or buy blah, blah, blah. Whatever it is you're wanting to invest into. Tokenization will allow that capital to cross borders. Next. Automated compliance, so again, like the settlement thing, because this is the blockchain, and because we'll be able to have smart contracts run so much of this tokenization with these things, we can have automated compliance, which means when I want to trade that asset that I've invested into, then the people that I'm trading it to, that whole process can be automated. It does not have to be human involved, because we'll be able to have, through the secondary markets, through the exchanges, the ability for this to be automated thanks to the fact that it's already on a ledger and that the exchange is going to be able to manage all of those relationships. Next. It's programmable, so smart contracts will give us the ability to do all kinds of cool things with assets simply because it's digital and there's a programmable side to that. Especially if you imagine if it's a revenue share tokenized security, revenue share STO, every quarter you're going to get a percentage back of this investment. Well, that can just be a smart contract. So now all you have to do is have the smart contract know how much revenue you created in that quarter, and that smart contract will be able to distribute whatever dividend it needs to all the people who own the tokens for the specific amount of tokens that they own, and all of that in an automated way with no humans having to be involved. That does something really amazing for the idea of like mutual funds and real estate investment trusts and all these kind of different vehicles for allowing people to invest in stuff. It means your fees go down. Because if everything's automated, then fund managers who make a ton of money selling investments to other people can no longer charge you a ton of money to manage that fund because all the fees go away. Next. So if cryptocurrencies like Bitcoin are considered programmable money, then you can consider security tokens a version of programmable ownership. Next. So this means we can break an asset down into smaller parts, but what's cool, it also means we can reassemble those parts into a new asset, which is the next slide. Next. So equities, we're not going to talk about, but this is investing into things in the typical way of like startups, getting equity in exchange for that. The next slide, however, with security tokens, with tokenized securities, with a revenue share, the thing that's really interesting about that, and this is what we're seeing the most of the interest being pushed into tokenized securities, is if you want to invest into a startup, you might want equity in the future of that growth. But if you're looking to invest into real estate, if you're looking to invest in intellectual property, into small and medium businesses that already have a ton of revenue, what you're actually looking for is to give them some money now, and then in exchange, every quarter, you will see a dividend from that. And these are much lower risk investments because you can actually look and see, well, that company makes say make $500,000 every month in revenue, and you're able to know that, well, if I give a percentage, if I give some money to their STO, to their tokenized security offering, and they tell me I will get X percent of the revenue every quarter, then you can do the math and realize they already make X amount of revenue per quarter. My money is going to help them make even more money, so you can actually de-risk your investments into an awful lot of assets by doing revenue sharing. People are also talking about profit sharing, but it's less likely simply because the accountants and lawyers are very good at hiding profits. So we'll probably stick to revenue sharing and just deal with the actual money you make and not the actual money you say is left over. Next. So how is this the future of investment? Next. Hello. Next. There we are. So we talk about blockchain startups, scale-ups, SMEs, real estate, intellectual property, fungible commodities, tokenized investment funds. I unfortunately don't have a ton of time, but I probably have about another minute left because the slides didn't get up quick. But the idea is that blockchain startups, that makes sense. They're already tokenized. We can do interesting things with them. Regular startups and scale-ups, however, there is a $4 trillion funding gap just in Europe alone, meaning the difference between what small and medium-sized businesses need to grow and what they can actually get access to. And while a lot of that stuff might not be an interesting investment, $4 trillion is an awful lot of money. I'm sure there's a lot of opportunity in there where people can put money into the future of those companies' growth and get something back from that in terms of a revenue share specifically, because these are revenue-generating activities. Real estate. What's interesting with real estate is this ability to tokenize a building, tokenize an apartment. So I could decide I want to buy a building and turn it into apartments. Well, instead of having to go to the bank and get a loan or in order to be able to start doing something, in order to then sell condos or something into the building, so I lose all ownership of that asset, all I do is basically facilitate the transfer of this building from this person to this person. That's what a lot of real estate developers do. They don't actually get to own the asset anymore. They're just basically getting some money in between what it costs to buy the building and what it costs to sell it to you and whatever's left over. Well, imagine with tokenized securities, the ability would be that I could actually do a tokenized offering, raise the money I need to buy that building and renovate it, and then the people who gave me money for that investment, I'm going to go out and rent those apartments or those offices. I'm going to create revenue. I own the asset. I create revenue, and now I share it with the people who gave me money, and I'm not sharing it in an ICO, the future is all happy and things might work out kind of way. This is a contract, and this is overseen by your government's regulatory organization for secure investments. So that really matters, but that means you can't screw with it. You'll go to jail if you do. So this makes it much more secure as an idea. So intellectual property is the last one that really matters. patents people make a ton of money from, films, books, music, art. Imagine people buying Avengers tokens, Harry Potter tokens, Mona Lisa tokens, all these kind of things that we can today tokenize, fractionalize huge assets like that, turn them into amazing opportunities to invest in, and make money from things that we also love. So all kinds of cool ways. We didn't get to run through all of it, but if you're very interested in this topic, I'd love to talk to you more. So I'll be back in the back there outside, happy to chat with you. Thank you so much.
Very good. Thank you ever so much, Ethan. Big round of applause for Ethan.